What is going on, everyone? My name is Kenneth Beer here with Stock Indices, where I go over my overall assumption in the market and my economic indicators, not mine, but the market's economic indicators. And I put that all together to come up with a market assumption and briefly break it down for you all to kind of pick my brain and understand how I am looking at the overall market here. So I'm going to dive straight into this video here. Today is Tuesday. Yesterday was Monday, the 24th. Today's the 25th. Yesterday we didn't have any economic indicators come out, but today we had some. This is Market Watch, by the way. I use this economic indicator calendar to just give me a very simple layout of the economic indicators that are released by the Census Bureau. And so if you guys look and use the data in the economy and its statistics to help build your portfolio and use that information to help hedge and give you an edge, then by all means, Market Watch is a very good platform to do that on. And I'm not sponsored by them. I'm just giving you the truth. Some of the data can be a little bit laggy here. It's about 11 o'clock and 10 a.m. They still didn't give me these new home sale numbers, but it is what it is. But the two numbers I do have right now is the CoreLogic Case-Shiller National Home Price Index. Previously was 12%, coming in at 13.2%, about 1.2% higher than what it previously was. So we can see that we're seeing a bit of a rise in home prices, and that could be because the value of the dollar going down with inflation, or just a transition into new higher prices for homes in the U.S. I believe they said something like, if you go to the article here, which is not my article, by the way, I didn't write this article. Phoenix had a 20% increase in home prices over the past year, so that's quite a bit. So we can see that happening for the home price index. Then for consumer confidence index, previously we were coming at 117.5. We were expected to be 118.7, but came out to be 117.2. So missing out on those numbers by a whole lot when it comes to our forecast. We're forecast to actually beat, and not only did we not beat, but we landed lower than our previous numbers. So for whatever reason, people in the economy having a little bit less confidence right now as far as going out and spending. And like I said, I always bring it back to this inflationary period that we've kind of been seeing in the economy so far. That could be a big part of it. But whatever it is, we're seeing lower numbers coming in. So that could affect, our overall trend in the market. So going into the charts here, I'm going to start off with VIX. VIX is, let's go back here. VIX got right back below that 19 level, below that 1927 level here. So VIX, getting a little bit closer towards, our low area. Still, low volatility, low fear factor in the market, which is good to see, for the overall bullish trend that we've been having. We've seen a little tad spike here. We were lower, but that green is showing us that we went lower, and for some reason, bounced back up. But nothing, to be too concerned about, as the market is still regaining that momentum that we were having with these lower volatility levels. That's what we want to see. Under this blue line here, that's where we want to be at. Whenever or below this yellow line. Anytime it gets above this yellow line, we're seeing. You can see anytime we get above there, huge spike. It usually goes crazy. Volatility goes through the roof, and we see a larger than normal sell-offs in the markets. So that is what we're looking out for. That as of right now, though, the market is seen to be recalibrating itself back into those normal volatile levels. normal volatility levels. All right, so let's look at these E-mini futures with S&P 500. So we see here, we broke out yesterday. Was making a little bit of a wedge here. And as we were kind of squeezing into this wedge, broke out. But today, you can see it didn't make it too far above this resistance level before seeing some overhead resistance above, the resistance level. So I'm thinking maybe it could pull back, find some support, continue to move higher until we get back up into our next resistance level, which is the all-time highs. So this little cool down period, they're not going to shoot that thing right to the all-time highs, of course. So I still believe that we have a lot of potential to get to all-time highs with the current market condition. As long as everything continues to look good in the economy, I simply believe that it's gonna not get down. If it does get down to these low, I don't know why it keeps freezing like that. Okay, if it does get down to these, to like, let's say it pulls back to the 50, okay, we have a problem. But that's a quite a ways away. So as long as we stay above here, it'll be a casual and just a regular technical pattern of a retest pattern. If it comes back down to our 4180 level, holds, and we continue to push higher for the ES or S&P 500. Looking at these E-mini Russell 2000 futures here. Let's go to the daily chart. So looking pretty strong in a micro perspective, as we're pushing right now above the 10 here, the 10 moving average. Getting a little bit of overhead resistance here though at this 50-day moving average. So we can maybe see a pullback before going even higher on this one. Market is seeing relative strength though, as the last 3 days we've been seeing green days, but we see that thing just turned red right now. So obviously the market is seeing a bit of a pullback as of right now. Let's go to the 1 hour chart and see what's actually going down. You can see it's dragging just a little bit today to that 50 on the 1 hour chart. So I want to see if that can hold up. As long as it can hold up above this 15, doesn't drop too much further beyond that on this 1 hour chart. And on the 4 hour chart, the 10, what we're seeing the 10 really close in conjunction with this trend. If it stays above the 10, then we look good. But if it gets back below the 10, goes to the 50, okay, we have to keep our guards up as far as risk management goes with these with the Russell 2000, because if it gets below all of our moving averages on each time frame, well, that is showing us that there is some sort of bearish momentum kicking in the market. So that's for our Russell 2000 here. Looking at the Dow Jones here, Dow Jones is pushing up to some overhead resistance. Yesterday we were seeing this get really close to the overhead resistance, but today it looks like getting stuffed right at it. So you can see kind of the pattern here with the 3 markets that I've shown you. We've came up to resistance and has seen the market react and push it lower. So that's kind of what I'm seeing with the pattern here. So the best thing to do is, if you're not in a position yet, well, for me, because I'm not a financial advisor, this means for a way you will lose money. But for me, if I'm looking at this and I see, okay, market is pulling back at a resistance, well, I'm going to wait for it to find some sort of support before I, enter into any position and go long on the market once again. So that is for the Dow Jones, looking kind of similar to the S&P 500 in my opinion. Looking at the Qs, the NASDAQ here. Okay, so NASDAQ, we got some resistance right here. Obviously, this is like a little gap level. We can see that it was some support, gap down, As it gapped down, came up, got a little bit above here, but got smacked off the 10, getting gap down. Again, fell below the 50. A lot of volatility going on here, a lot of craziness, but we're right back above all those moving averages, showing us that some bullishness kicked back in, but we're not completely bullish yet, as we still have a ways to go till we get to the all-time highs. But I'm thinking that it may take some time with how far the moving averages are away. I'm waiting for that 10. As soon as that 10 flips right back above that 50, I believe that's when the momentum is going to really start to kick in. And that 10, by the way, is this yellow line. As soon as the 10 starts to trace this yellow line and starts to get closer, okay, then I think that momentum is kicking in here. But on the 4-hour, it's right there. 10 is right there on the 4-hour, but it's a lower time frame, so that's just showing us on the lower time frame that yes, the market is bullish as of right now. We've been seeing consecutive green days, but right now we're getting stopped at this overhead resistance level. So I want to see if it maybe can hold up at the 10. If it can't hold up at 10, we want to see it potentially be able to hold up at the 50. If it can't hold up at the 50, well, that is going back into bearish territory. And yeah, so just waiting to see, okay, if it holds and we get hot and we go higher from here, above this resistance level, then we could see it to start making more progression to the upside for the NASDAQ. So that is all the indexes that I'm going to go over today. Now, I was looking at some of the sectors, seeing where the money was flowing today, and I believe that the top leading sector on the day was, the sectors are all going lower, but the real estate sector is leading today. And that makes sense. XLRE. That makes sense on why it'd be leading today with those, rise in prices in the home sales. So just obvious, where the money is going today, as far as sector rotation. And so, real estate, XLRE, is seeing gains to the upside. And so just keep an eye on that. Anything dealing with real estate is moving up to the upside. As far as energy though, XLE goes, XLE is seeing a bit of a pullback. You can see that here. XLE has been dropping, so don't know how far it's going to drop for, but energy does have some support down here. Would like to see it hold up before it becomes too substantial and falls off into no man's land. But I'm trying to see if they have an explanation here. It says sector energy stocks trade lower pre-market Tuesday. Energy stocks were trading lower pre-market Tuesday as the energy sector was recently signaled in the United States. Oil fund was declining. Okay, so got something to do with the oil fund slipping. Could be because of that, because of the prices of oil going down. So that's why energy sector is dragging a bit. So yeah, it looks, not oil, but energy hasn't been doing well in itself. But today, seeing a bit of a more crucial drag for the energy sector. So just keep an eye on that, seeing where the money is going, seeing where the money is being taken out of. It's just a really big imbalance as far as the real estate and energy goes. Real estate isn't up that much, but it's up, but energy is being sucked. So, sucked out of, So, that's all I'm going to be going over for today. That's all my technical analysis and all my, that's all my bearings. Everything that I've saw in today. If you guys enjoyed this video, leave a like, comment, subscribe, share this video, leave a comment if you have any questions with any more options, anything you want me to go over with any option strategies, because that's what I do. And I am happy to go over those things with you all if you have any questions. So that's what I'm here for. And I will see you all in the next one. Thank you for tuning in.